Well, I mean, the Ukraine situation is obviously something that everyone is looking at very carefully. Our role as a market is to make sure that investors can actually find the appropriate market to hedge their positions, to come in and out of positions, make sure that we stay active. And we're doing, our best to make sure that the markets remain calm and try to manage with the situation in the best way possible.
But is that possible in this environment when volatility is increasing pretty much on a daily basis?
Yeah, it's true. I mean, and that's why the key focus for us is to make sure that the market is available for all investors. It is a challenging time. There's a lot of things we have besides the Ukraine situation. We have, what's happening with inflation expectations, potential rise in interest rates. You're right. Volatility has increased quite a bit. We've seen that in our volume, but our systems are up. We're coping very well with the current situation.
And so what does that mean for your outlook for this year, for 2022, given your performance as you wrap up and, of course, close out 2021?
Well, what's interesting about exchanges is in that the periods of high volatility, obviously, the amount traded goes up quite a bit. So in terms of volume traded, today was a pretty active day, lots of investors coming in and out. However, for the long term, the preference is to have stable with a positive long-term outlook. And so I would say that you can't look at a short term, because in the short term, you may have some benefits, but in the long terms, we want to encourage long-term capital formation and getting great companies out there and investors investing for the long term. I mean, that's what's best for the long-term markets. And days like today, we have lots of activity, but it's challenging.
It is challenging. And given the backdrop, so geopolitics is one, the COVID situation is another, and then like you pointed out, rates and inflation expectations also being another whammy really for investor appetite out there. What would that mean for IPO activity, where we have seen a bit of a slowdown in overall listings? What can you tell us about the trend there?
Yes, I mean, that's a very good point. I mean, last year we had 98 IPOs, raising over 300 billion Hong Kong dollars. And then as we got into the fourth quarter, we saw that the level of activity actually slowed down quite a bit. We've seen the first few weeks of this year that was also slowing down. So I would expect that, the start of the year is going to be fairly slow. It's hard to make sure that companies go out and price their deals with this market. So it is reasonable to expect a lot slower activity, much lower level of IPOs. The pipeline is very good, though. I mean, you can see that from the filings. I mean, there's about 160 companies that have filed A1s and are just waiting for their process to be approved and to go out when the market conditions are right. So the environment is good, the pipeline is good, the market is not right there at this point.